It's now time to bring you the latest from the world of business. We'll now start off with the Federation Account Allocation Committee, which says it has shared 954.09 billion naira to the three tiers of government for the month of July this year. This was contained in a communique designed by the Director of Information and Press. He says that from the amount which included gross statutory revenue and value-added tax, the federal government received 406.61 billion naira and states received 281.34 billion naira, while local governments also got 210.62 billion naira, while the oil-producing states received 55.515 billion naira as derivation fund. The communique also indicates that the gross revenue available from the value-added tax for last month was pegged at 177.167 billion naira, which is a decrease distributed in the preceding month. And now, still talking money matters, Nigeria spent much more money servicing debt than what it earned between January and April this year, and that's according to the Director General of the Debt Management Office, Patience Oniha. Now, she says that the cost of debt servicing has been a major concern as the federal government spent more on debt servicing in the first 4 months of this year than the revenue it collected, adding that the debt servicing bill increased by 109% between last December and this March, rising from 429 billion naira to 896 billion naira. Now, according to the data obtained from the DMO, this amounted to 3.83 trillion naira on debt servicing payments in just 15 months. The DMO chief wondered how much revenue Nigeria is generating, saying that statistics show that relative to other countries, Nigeria's revenue generation is low. And now moving on to the power sector, the Association of Nigerian Energy Distributors has revealed that 11 electricity distribution companies, that's DISCOs, collected 777 billion naira in the first quarter of this year. The Executive Director of Research and Advocacy, Sunday Odunton, who issued the statement in Abuja, also notes that the high collection was recorded despite various lapses in the industry. He also adds that the DISCOs have installed 129,352 distribution transformers since the power sector's privatization in 2013. The association also states that the DISCOs admit their lapses, but that investors and operators remain committed to improving the service delivery. And now, shifting focus to the maritime sector, corruption will subsist in Nigeria's port operations unless importers adhere to compliant trade practices. This is the submission of concerned freight forwarders regarding complaints of multiple checkpoints in the nation's port corridors. We have TVC News correspondent Ifeanyi Eze with the details.
Cargoes are often permitted to exit the port after consignment must have satisfied all import guidelines in line with government international trade policies. But in reality, findings show that even after cargoes have been cleared by relevant port agencies, multiple checkpoints still exist outside the seaport to check already cleared goods. This has become an issue of controversy. In his reaction, the leadership of concerned freight forwarders contends that customs checkpoints will subsist as long as importers and agents continue to engage in false declarations of cargoes.
The truth remains that customs is being lenient, because if truly they want to do the 100% what they're asked to do, most of 70% of boxes in the port will not be able to come out because there is a lot of infractions. And you know what that means in customs term? Seizure, outright seizure.
In as much as the importers refuse to do the right thing by bringing in prohibited items, customs will continue to checkmate them by bringing in policies, checkpoints that will curb that menace.
They argue that stringent policies have contributed to importers' non-compliance to import guidelines.
The challenge we are having now is some of the government policies, some of the like CBN policies and all that is also affecting importers. So by the time you bring in goods and then you source money to bring in dollars and all that, before you know it, the cost of a particular item will skyrocket. And who suffers this is the masses.
Every importer must find a way to factor his cost into the goods or whatever it is to sell, and also this is a very, very big problem for us, and something has to be done. Most of them have also gone out of business. Some people, before they will make a transfer from Nigeria to China, will take them like 1 month and more, and all like that. So many of them, at the end of the day, then we end up losing money because they are looking for every avenue, every means to get their money to China or anywhere of any part of the world.
They also blame delays caused by terminal operators and shipping companies in cargo clearance processes as major factors that add to cost, and by extension, encourages sharp practices by port users to increase their profit margins. Ifunanya Eze, TVC News, Lagos.
And outside Nigeria now, Asian share markets are broadly positive, while the dollar is slightly weaker today, with investors nervously awaiting the U.S. Federal Reserve's annual Jackson Hole conference for clues on how sharp future interest rate hikes might be. In early European trading, the pan-region Euro Stock 50 futures were up today, 0.25%, while Germany's DAX futures were also up 0.34%, and London's FTSE futures up 0.29% at 7,494.5 basis points. US stock futures, the S&P 500 E-minis, were also up 0.42%, and still MSCI's broadest index of Asia-Pacific shares outside Japan edged up 0.7% after US stocks ended the previous session with mild gains. Australian shares climbed 0.7%, while Japan's Nikkei stock index was also up by 0.72%. China's CSI 300 index rose 0.1%, while we also see the Hong Kong Hang Seng index opening up at about 1.7% in a shortened trading session due to a typhoon. In the United States now, Federal Reserve Chair Jerome Powell's message on inflation and interest rates at this year's Jackson Hole Central Banking Conference in Wyoming will strike a tone entirely different from the soothing one he used at the same event just 1 year ago. Back then, Jerome Powell used a series of charts to illustrate why he expects price pressures to ease and believe a still underemployed and pandemic-battered nation needed continued support from the United States Central Bank. Fast forward to this week, and while Jackson Hole's majestic, mountainous backdrop remains the same, the economic landscape has changed. The Powell-led Fed is battling high inflation with the sharpest set of interest rate hikes in 40 years. So far, Jerome Powell is due to deliver his speech tomorrow at 1400 Greenwich Meridian time. And in France, the French Transport Minister Clement Beaune today is also calling for an investigation into whether French oil major Total Energies is involved in supplying jet fuel to the Russian military through a local joint venture. Le Monde newspaper reported yesterday that Total Energies was involved in supplying gas condensate to make jet fuel that may have been used by Russian warplanes in Ukraine via the French firm's stake in the venture with Russia's Novatek. Total Energies, which unlike major Western rivals has also held on to its assets in Russia despite criticism, says it did not operate infrastructure that would have supplied the Russian military and had no knowledge about any potential jet fuel production by its business partners. French Transport Minister Clement Beaune, who is also saying that he did not have any information or enough information to take sides on the matter, was the first French government official to comment on the allegations, which could also undermine President Emmanuel Macron's efforts to bring about peace in Ukraine. And wrapping up business news at this hour, oil prices on the international market rose today, and mounting supply tightness concerns continue amid disruptions to Russian exports and the potential for major producers to cut output and the partial shutdown of a U.S. refinery. U.S. West Texas Intermediate crude recorded a slight drop in price of 0.01% to hit $94.88 per barrel. Brent crude now sells at $101.30 per barrel, registering an upward price margin of 0.12%. Bonilite's static performance still retains at $118.10 per barrel, with a price drop of 3.25%, and for the OPEC basket, Crude oil dealers offer $101.90 per barrel, recording a price surge of 3.26%.